Big day, big team to cover it. Joel Schumann is with us. Scott Martin's out there in, I think, Chicago. And Ashley Webster's right here in New York City.
Yes.
All right. This, Scott, first to you. This is all about, at this moment, the softer language from China on trade. That's what's propelling this rally. Is that correct?
Yeah, I agree, Stuart. And by the way, yes, I'm in Chicago for now. We'll see what the politicians do it over the next couple of years if it stays Chicago. But here's the thing. Similar to that notion, you're right. With respect to China, now we're seeing things calm down a bit. But I got to warn everybody, you know, the market gets in these moods, Stuart, where it overreacts to, say, negative China news and probably underreacts to good China news. So just keep in mind that the market goes through these psychological phases, and it's just one bad news, say, item away from having another big sell-off.
Joel, I'm astonished that yesterday we were up 250, this morning we're up 270. That's an extraordinary turnaround.
Right. Well, we've been seeing this all year long. I mean, particularly since May. I mean, we had a really rough May, and then we had an outstanding June, July, and then we've had a tough August, and and here we are, nearing the end of August, early September. So we've had a lot of volatility. It all seems to be going to China. Good news, bad news. Markets are responding very strongly now. It's the end of the summer. We have light trading in Wall Street.
We've completely recovered from the interest rate scare and the China trade scare. What you got?
I would be really interested to see what happens tomorrow, because we go into a long weekend. Are people going to take money off the table? For the facts that you mentioned, we have those tariffs that go into effect on September the 1st. We have what's going on in Hong Kong. Could we start brewing up again? All of those things. Or Tuesday, yeah. So what happens tomorrow, and where do we go on Tuesday? There's still a lot of angst.
Well, right now, we've been open for 2.5 minutes, and we're up nearly 300 points. We are up 100 points on the NASDAQ composite. All of the major indicators are up much better than 1%. That, ladies and gentlemen, is a strong rally this morning. Again, quick look at the yield curve. It is inverted. I'll get you on this real fast, Joel, because
we're hearing a lot about this, and again, the 2-year, 10-year, 3-month, 10-year. I mean, well, because the China news is dominating, and again, we're talking about year-end. I mean, we're talking about month-end, right before holiday weekend. Fairly light trading. Many of the traders are gone for the long weekend. So this is not unusual to see lots of volatility right before holiday weekend.
Okay, and we are now up 307 points for the Dow. That amounts to 1.17%. It's a rally, first thing, right out of the box on a Thursday morning, following a big rally on Wednesday. Got it. Look at some individual stocks. Best Buy, sales showing some signs of weakness, and it's concerned about tariffs. The stock is down 7%. What do you got on that one, Joel?
Well, this is a company that for at least a decade, in fact, for the last decade, they're down 20% in revenues, but profits are about $1.9 billion. 10 years ago, they were $2.5 billion. They've actually improved margins a little bit. Interestingly enough, another retailer that was in the news last week, Walmart, similar margins, 23, 24%.
Crushed it.
EBITDA is about 6.5, 6.4. So, but one of the multiples, the enterprise value to revenues, is about half the industry. And so this is still strongly valued, and certainly when you compare it to other companies like GameStop, they're much better positioned.
Hey, Scott, I want to ask you this. I think Walmart and Costco are the two best retailers in America. Where am I going wrong?
Agreed. I'd throw in Amazon there if you'd like, with a little tech mixed in there with obviously the web services. I love the shout out Joel gave to GameStop. They're lucky to still be in business at this point. But he's right. It's interesting how messed up retail is, though, these days, guys, because there's like a few winners, right? The Walmarts, the Costcos, the Amazons. I mean, you saw the Costco opening of the store in China. Absolutely bonkers. But then there's other ones like Macy's, Nordstrom's that are getting crushed. Target's another one to keep an eye on here going forward because they look pretty good.
Okay, now look, we've got the Dow up 300 points as we speak. Little background here. Softer tone from China in the China trade negotiations. President Trump, just about 10 minutes ago, issued a tweet in which he suggested a big new package for farmers was on the way. And literally right about now, the president is about to start to speak with my colleague Brian Kilmeade. Whatever he has to say, you'll hear it first, and let's see what it does to the market. The dollar stores, that would be Dollar General and Dollar Tree, both came out with a nice rosy forecast for the future, and they've gone straight up. Dollar General, 8% higher, $12. Dollar Tree, up 3.5%, $3 higher. Look at this, though. Abercrombie & Fitch cut its forecast because of the impact from tariffs, down nearly 10%. A good report from Build-A-Bear Workshop, higher profit, higher revenue, doesn't matter, down 5 cents, which is 1.4%. Google reportedly moving some production of its Pixel phone from China to Vietnam. So what do you make of that then, Scott?
Well, it's good news in the sense that it shows you that these tech companies, which are obviously very leveraged to China, Stuart, have the ability to go other places like Singapore, Vietnam, Korea, and so forth. But just remember that this was something that was kind of already in place. And if you talk to other tech companies, if you look at some of the other supply chain concerns they have, China is still a stop on their route for making their products. So while this is great news in one sense, there's a lot of other supply chain concerns that we still have with respect to putting out China in this whole place.
Yeah, a lot of them are moving out of China.
Right. Well, in fact, I agree with Scott on this issue as well. I mean, we're going to hear more about the Mighty Five or the Midi Five: Malaysia, India, Thailand, Indonesia, and Vietnam. I mean, these countries are well positioned to take on China. In fact, I'm surprised that we haven't already heard, one of the advisors to Mr. Trump say, "Why don't we give incentive to move to the Mighty Five and bring China to the table by doing that?"
That's an interesting idea.
Yes.
Not yet a proposal.
But it's not easy to undo all of those production lines.
No.
It takes a time.
Yeah.
Once
it's a big commitment once you're out. Yes.
Yeah, and I think that will bring them to the table.
Right.
Now, take a look at Apple. It's at, $208 a share as we speak. It's up $3 in a big moving up market. It's apologizing for letting third-party contractors eavesdrop on audio recordings picked up by Siri, some of them reportedly intimate. This may be a black eye for the company, Scott. It may be a black eye in terms of PR, but absolutely no effect on the stock. What do you say?
Yeah, nobody cares. It's just like Alexa, Stuart. Nobody really cares that they're listening. I'll tell you what, though, real quick on Siri. We've had a very intimate relationship for about 7 years, and she still can't understand me. So whatever those guys are hearing that I'm saying to Siri, I don't care.
We've raised these privacy concerns, and I am concerned. I mean,
we should be.
Pretty soon, everybody's on camera all the time, and everybody's listening to everything.
Exactly.
But, look, you can't stop it.
No.
You've got to get used to it and accommodate it somehow or other. Right.
And I think the markets have already anticipated all these companies with listening and so forth. And this is a story that's been around for a year plus. And to Scott's point, I don't think anybody cares. And half the time, they're not really hearing it properly anyway. So,
I want to give out one of the most fascinating stories of the day. The Treasury Secretary, Stephen Mnuchin, he says the U.S. is thinking seriously about issuing a 50 or 100-year bond. I love the sound of that. It would make the deficit financing much cheaper.
Yes.
And if I could get a 100-year mortgage, I'd take the damn thing.
Borrow as much as you can. If the interest rates are going to zero, you take it all day long, 50 years, 100 years, whatever the interest rate, it's low. And the government, too. I mean, why shouldn't they join the party? So I think if this happens, great. I mean, it's good news for the markets, good news for the
Is that a response to the negative interest rates that we're seeing elsewhere around the world?
I think it's a response to the plunging of interest rates worldwide.
Right.
So if you can issue something for 30 years, you're locking in an exceptionally low interest rate.
50 years.
A century, for heaven's sake. By the way,
at
the
3%.
30-year... Yes, I'd like 3%. But at the moment, the 30-year bond, which is the longest out date at the moment from the Treasury, is 1.9, what is it? 1.9?
Oh, 1.95?
Yes.
1.96%.
Yeah.
1.97 just turned. 1.973.
Okay. If I got a 100-year bond, 2%.
Take it.
Think about that.
Because you get a tax break on a Treasury bond interest. You don't pay state taxes, I don't think.
That's right.
I think you do.
You don't.
I'm in.
Mine's turning.
Look, it's moving real fast today. The president has, I believe, begun his interview with Brian Kilmeade.
Still waiting for headlines.
We're waiting for the headlines. I've not seen anything yet that would move the market. When we get it, you'll know it real fast. Look, it's 9:40 Eastern Time. Joel, Scott, thank you very much for being with us today. Very active and, frankly, exciting day, and we're glad you're here for it.